May 30th, 2026, and the Treasury Department is openly bragging about grabbing wallets. Let's go! Quick shout out to today's sponsor, Compete Token, the gaming crypto that actually has real games attached to it. Link in the description. Treasury Secretary Scott Bessent just said the quiet part out loud. The US has seized about $1 billion in Iranian crypto and just outright grabbed the wallets. That's double what they admitted to in April, and Bessent literally joked that some Iranian wallet owners may be typing their seed phrases in right now, with no idea the funds are already gone. Look, sanctions on a hostile regime, fine, that's the job, but we just grabbed the wallets on national television is the most powerful crypto adoption advertisement Bitcoin maximalists have ever gotten for free. Self-custody, hardware wallets, multi-sig, Bessent just sold all of it in one sentence. Spot Bitcoin ETFs just bled for 10 straight days, and the analysts are calling it bullish. Nearly $3 billion walked out the door since May 15th. One single day hit $733 million in outflows. Total ETF assets dropped from $104 billion down to $94 billion. Sentiment is calling it peak fear and a contrarian indicator, which is analysts speak for everyone panic sold, so it's probably the bottom. History agrees with them. When BlackRock's ETF investors are stampeding for the exits, that's usually the exact moment smart money starts backing up the truck. While Bitcoin ETFs bled $2 billion, XRP just pulled off a casual $1 billion power move. Ripple is reportedly leading a $1 billion XRP treasury raise, and the spot XRP ETFs quietly added $35 million in inflows over the same window. Total XRP ETF assets are now sitting at $1.12 billion. XRP Army has spent 8 years getting clowned on, and now they've got their own ETFs, their own treasury vehicles, and inflows while Bitcoin gets redeemed. The vibe shift is real. Circle just froze $12.6 million in USDC sitting in Privacy Protocol Zama's smart contract, and according to on-chain sleuth ZachXBT, they didn't bother giving Zama a heads up first. The exact reason is unclear, which is corporate for we don't have to tell you. This is the same Circle that somehow can't ever find the wallets after a major hack, but can absolutely freeze a privacy protocol on a Saturday afternoon. Tether froze $500 million in stolen funds last month. That's the bar. Circle, do better or stop pretending USDC is anything other than a permission database with marketing. A Texas man named Nathan Fuller just got sued by the SEC for a $12.3 million crypto scheme built on, wait for it, fake AI trading bots. He promised 150 investors guaranteed returns of 40 to 100% in 3 weeks. Of the $12 million raised, $6.2 million went straight to his personal expenses. Anyone offering guaranteed 100% returns in 21 days is running a Ponzi scheme. Always slap AI on the front of it in 2026, and apparently 150 people will mail you a check anyway. The bots didn't exist, the FDIC insurance didn't exist, the surety bond didn't exist, none of it. Just a guy in Cypress, Texas with a laptop and a dream. Florida Republican Michael Carbonara just liquidated 10 Bitcoin for $800,000 to bankroll his run for Congress. He's the founder of digital bank Ibanera. He's running in the newly redrawn 22nd district, and he's campaigning on putting the entire federal budget on-chain for real-time transparency. Imagine sending 10 Bitcoin to DC to fight for crypto policy. That's either the most based campaign finance move of the cycle or the most expensive lesson in why you should have just held. Either way, we love to see crypto folks actually run for office instead of just tweeting at the SEC. The CFTC just greenlit Bitcoin perpetual futures on Kalshi. That's right, Bitcoin perps, the same product that's printed billions in volume on offshore exchanges for years, are now officially blessed by the US regulator and live on a prediction markets platform. Finally, American traders have been wiring money to Dubai-based exchanges for half a decade just to trade the most popular crypto product on Earth. The CFTC waking up and approving onshore perps is a massive win, and it's happening on Kalshi of all places. The lines between prediction markets, derivatives, and crypto just officially blurred for good. The S&P 500 just posted its 9th straight weekly gain, longest streak since 2023, and crypto decided to sit this one out. Bitcoin slipped 2.6% to 73,400, Ether dropped to 2011, Solana fell to $82. But buried inside the red was one absolute monster. Hyperliquid's HYPE token ripped 20%. While the majors got dragged, the new generation of crypto kept printing. That's been the trade for months now. Boring beta is out, picking the right horse is back. Speaking of hyperliquid, Grayscale just dropped a research note calling it a future financial services juggernaut as DeFi expands. That's a serious word from a serious shop, and it landed the same week hype ripped 20% while everything else was bleeding. Grayscale doesn't throw around the word juggernaut lightly. When the firm that runs the biggest crypto trusts in the world starts comparing a perps DEX to a financial services giant, you start to understand why hype keeps catching bids while Bitcoin gets redeemed. BSTR co-founder Sean Bill just called out half the Bitcoin treasury industry as carnival barkers. His take, a lot of these companies don't have the capital structure to actually deploy Bitcoin, they're just hoping the coin does all the talking for them. And he's right. The poster child for this is Nakamoto stock, which is down 99% from its peak last May. There are now 198 public companies holding around 1.25 million Bitcoin between them, and Strategy alone holds 843,000 of those. The rest? A lot of carnival. Big thanks again to today's sponsor Compete Token, actual games, actual utility, link in the description. That's the news. Like, subscribe, and we'll see you tomorrow.